If you're co-hosting short-term rentals or thinking about it, how you structure the business matters a lot. Because when done the right way, your co-hosting company can do more than just generate you income. It can unlock tax benefits, help you qualify for real estate professional status, and even fund your next property purchase, but only if you set it up the right way. And in this episode, I'll walk you through exactly how to structure your short-term rental co-hosting company for maximum tax efficiency. We'll cover when and how to use an S corporation, why you need separate books and records for each property, how to keep QuickBooks clean between the ones you own and the ones you manage, what it takes to qualify for real estate professional status if you're transitioning to full-time, and what to do with your profits once they start coming in. Okay, so this is going to be a little bit different than what you might have heard before about entity structure when it comes to real estate. If you own properties on your own, those are passive rental properties, so we want those flowing through single-member LLCs, multi-member LLCs, or just in your personal name with really good insurance. Now, when you are co-hosting or you're property managing and you're receiving active income from that, whether the owner's 1099ing you, you're a W-2 for somebody else, you're going to want that income to flow through an S corporation. And I've filmed tons of content on S corporations before, so if you need a refresher, go check out those podcasts. We'll link them in the show notes. But an S corporation is going to save you a ton of money in taxes when you're a property manager or co-host, because now you're going to be able to shield that income from self-employment tax. You see, when you own properties on your own, that's passive income. When you manage other people's properties, that's active income, just like your W-2 job. And that income, not only is it subject to federal, state tax if it applies, but most importantly, it's also subject to Social Security and Medicare tax, which is an additional 15.3% if you own a co-hosting company. And you need an S corporation in order to get around that, okay? So a couple quick steps. The first thing you're going to do when you have a co-hosting company is form your LLC, okay? So you can go to the Secretary of State website to form that. I would recommend forming your co-hosting company in the state where you're going to be doing most of your work. So I might live in Illinois and I might be managing a bunch of people's properties in Florida. I'm actually going to set up my LLC in Illinois because that's where I'm doing most of my day-to-day activities, okay? So I set up my LLC and then I have to elect S corporation status. So it's a form that you fill out with the IRS. It's called Form 2553 that allows your LLC to be taxed as an S corporation. Okay. Now there's other stuff you have to do throughout the year, like you have to put yourself on payroll, you have to file an additional S corporation tax return at the year end. This is all stuff we can help you with and strategize on you with. And so if that's important to you, let us know. You could book a call with us, but you're going to want to be funneling this income through an S corporation in order to save so much money on self-employment tax. You see, when you're an S corporation, you're not just a normal rental property owner anymore. You have an actual business. And just like a business owner, you're going to have to run payroll for yourself, file additional business tax returns, and there's a ton of stuff you're going to have to do throughout the year in order to keep this thing in compliance. But remember, that's going to get you access to the tax benefits that a normal business owner would get that of a rental property owner doesn't get. Now, here's the most crucial thing about owning your own properties and also managing other people's properties. You got to keep separate books and records. You should be keeping the properties that you own completely separate from those that you manage for. And there's tons of issues with this when it comes to Airbnb accounts. Because if I'm a successful Airbnb host, I want to use my page, all my 5-star reviews, all the amount of guests that have stayed as marketing. Okay. So I'm going to be engulfing or absorbing these other people's listings, right? I'm going to be putting their property on my platform. The biggest thing to remember about this is that now Airbnb or VRBO is sending you a 1099 for that income. And you have to remember to also 1099 the property owner that you're receiving income on their behalf. Let's say I have $100,000 of co-hosting revenue that's coming in, $100,000 of property revenue. I need to be 1099ing the property owners for their share of that revenue. Because otherwise, I'm going to get a 1099 from PayPal or Airbnb or VRBO that says, hey, you made $100,000. Well, I actually didn't make $100,000. I collected that on behalf of my clients and my co-hosting clients. So in order to do that, you need to make sure you're 1099ing your co-hosting clients. Now, when it comes to actual bookkeeping, I would recommend a separate QuickBooks account. Okay. So you have a QuickBooks account for the properties that you own, the 3 or 4 properties that you might own. you're going to set up a separate QuickBooks account. QuickBooks Online Plus is $50 a month. If you can't afford $50 a month for your business, you do not have a business, you have a side hustle and you have a hobby. You're going to set up a separate QuickBooks account for the properties that you co-host, in addition to the ones that you own. And the reason between this is the commingling of funds. Like, you don't want to get your funds with your properties mixed up or confused with those funds of somebody you're managing a property for. You'll fall into legal issues, money issues, etc. I would not recommend that. Use QuickBooks and use the class feature. So what's really cool about the QuickBooks Online Plus is it has this class feature. If I own 4 properties that are my own in QuickBooks, I can have 4 bank accounts, 1 bank account for each property linked to that. And then I can see a profit and loss that shows each property and how much I'm getting in income for each property, how much am I spending on utilities, supplies for each property. And then I can also do that for the people that I co-host for. So let's say I'm co-hosting for 10 different owners, 10 different properties. I can have in that one QuickBooks account, I can have a breakdown of all the revenue and all the expenses for each owner inside of that QuickBooks account. And also too, when it comes to 1099ing, by the way, QuickBooks makes this easy because QuickBooks also allows you to 1099 people through QuickBooks platform. And so if I collected $100,000 on behalf of other people, other people's properties, I can easily just plug in their name, social security number, LLC information, and send them that 1099 at the end of the year. Now, this is the part where most short-term rental co-hosts leave money on the table without even realizing it. If you're earning income but don't have the right structure, the right books, or a proactive tax plan in place, you're probably overpaying and under-deducting, or both. My team helps short-term rental real estate investors clean all this up. Proper identity setup, streamlined bookkeeping, and tax strategies that actually match your business while it's growing. If you want help making sure your back end is as dialed in as your operations, click the link below in the description and you can book a call on the next page. Now, we talked about some tax benefits before with the structuring of how you set up your company for co-hosting, but let's talk about some of the things that it also unlocks you. Because as a full-time co-host, and if you're going to be a full-time co-host, those hours actually count towards real estate professional status, okay? So the hours that you spend managing other people's properties count towards real estate professional status. And so this is very important for those that might own long-term rentals, midterm rentals, multifamily properties, because before, if you didn't have this job, this co-hosting job, you probably weren't going to be able to deduct or become a real estate professional, right? But now that you're managing other people's properties, those hours count towards real estate professional status and unlock a bunch of other tax benefits. Real estate professional status, for example, real estate professionals, they don't have to pay net investment income tax when they sell a property. And this is a huge deal when you're selling properties that have huge gains. For every $100,000 of gain you have, you're going to pay $4,000 just in net investment income tax alone, and you can get away with that if you're a real estate professional. Now let's also talk about what to do with the profit, because now that you have a business and you're in the business of managing other people's properties, you also get some deductions that business owners get that you did not get when you just own rental properties, okay? One of those being that you can hire your kids. And with hiring your kids, what happens is you're going to be able to deduct the amount of money that you pay your kid from your income tax, and they get to pick it up at their tax bracket. So if I'm a 30% tax bracket and I pay my kids $10,000 a year to help me manage the business, then I am going to be able to write off that $10,000 and they pick it up as income. The trick is, because your kids don't have a lot of income, they're not going to pay tax on it. So it's like a free $10,000 deduction that you get off the top on your business income. It's not just about hiring your kids. We also want to make sure that you're doing it legitimate. Now, when it comes to hiring your kids, the IRS has clearly said that if your kid is not at least 8 years old, it's probably likely that you're only doing this for tax reasons. Your kid has to have an actual job with an actual job description doing certain tasks. And think about all the things that our kids can do in our co-hosting or our real estate businesses, right? They can help us optimize the listings. They can help us file paperwork. They can help us cut grass. They can help us do bookkeeping. They can do advertising for us. So all these things, the number one consideration that I always say to clients when they ask, well, how much can I pay them, is what would you pay your neighbor's kid to do the same task, right? So what would you pay your neighbor's 12-year-old son to do that? That's probably what you should pay your kid. So you're not going to pay your kid $50 an hour to file paperwork, right? That's probably a $15 or a $20 an hour job, okay? So we want to make sure that we're doing it the right way and we're not cheating the IRS. You also can roll in your health insurance deductions if you're self-employed. Whereas before you were not able to deduct those if you were just a W-2 or you had income that was not in business. Now you're able to deduct those health insurance deductions. The benefit that people who manage properties get that people who have rentals don't is now you have access to contribute to a solo 401k or a SEP IRA, which are like these retirement account plans on steroids. Because with a solo 401k, not only can I contribute the same $23,500 that any other W-2 employee can, but because I am the business owner and I am an employee of my business and I'm the employee of the month every single month, I also can do matching contributions on my wages. So in a normal 401k plan as a W-2, I'd only be able to contribute $23,000. With a solo 401k, I can do $23,000 plus 20% of my wages. And so most people, when they would only be able to deduct $23,500 of 401k contributions, now some of them are going to be able to deduct 40 to 50k of 401k contributions to help offset their income. And what else you can do with the profit is now you can buy more properties, right? Because if I'm making more money co-hosting in that certain area or market, now I'm going to be able to have more income and file tax returns with that. That's going to help me qualify myself to be able to buy more properties. The big pitfall, the big trap that people make when they own rental properties and they also own a co-hosting company or a management company, this is a mistake they make. They think that they should charge their own rental properties from their co-hosting business the same amount, the same percentage. This is a trap because it's converting income that was passive into active income. You want to avoid that mistake. So if you own a co-hosting company and you also have rentals, you should not be charging yourself a management fee to manage your own rentals, because now you're converting that income from passive, which is super easy to offset by deductions like taxes, mortgage insurance, depreciation, and other write-offs. Now you're converting that from passive to active, and you don't want to do that. So you do not want to be charging your own properties a management fee. That's a huge mistake a lot of people make when they manage other people's properties and they manage their own. Do not charge yourself a management fee, because I guarantee you will pay more in taxes at the end of the year. Now, if there's one thing that I want you to take away from this, it's that you are running an actual business now, and this is way different than when you just own properties yourself. When you just own properties yourself, it's okay to put your P&Ls together at the end of the year very sloppy or wait until tax time to do this stuff. When you're owning an actual business and you're running a business and you're keeping track of other people's money, your profit and loss statements have to be exactly dialed in every single month. You cannot wait till the end of the year to figure this out. You need to do it right now, every single month while you're running a business, because you are now a business owner and not just a rental property owner. And if you like this video, you're definitely going to like this one over here. So click on the link and I'll see you there.